So I guess to start off this evening, I would ask if Mark, if you wouldn't mind introducing yourself to everyone here who hasn't met you before. You've done some meetups with us in the past, but we have some new members. So tell us a bit about yourself, Mark.
Sure thing. Thanks a lot for having me here. Of course, we do a lot of work together. I'm always happy to help out and be here. My name's Mark Charles. I am a real estate and business lawyer here from Dartmouth. I practice at a mid-sized firm, Heritage House Law. We are in downtown Dartmouth in a historic building from the 1870s. So we've had all experiences at different angles of real estate owning. So I work with individuals when they're buying homes, but also I work all the way up to large, already established income property owners, investors, all angles of real estate. So I also have a background in business structures. So I work with companies. I have a really sort of niche client base of income property owners from small to mid-size. I've been practicing for about 11 years. I started at a large firm. I did my own shop for a few years, and now I'm here with a very large real estate practice in downtown Dartmouth.
That's great. Well, thanks so much for the introduction. Everyone knows Mark a little bit better now. So Greg, if you want to take it away with the interview.
Awesome. Thank you, Amanda, and thanks everybody for joining. We're really thrilled to have you guys all here for another session with Halifax real estate investors. We're going to try and keep up with some more regular interviews and articles going out as much as possible to keep you guys with the content that helps you hopefully a little bit in your investment journey. And like Amanda said, we're thrilled to have Mark join us this evening to talk a little bit about the law in real estate, but also how things have happened since COVID started. Like we had an interview with Mark earlier on and how the processes were going to change. But so it'll be interesting to have a little bit of a chat and see how that's affected in a positive or negative way. So yeah, excited to do this. So we'll dive right in. And like Amanda said, after we're done this, we'll have a little bit of a chance for you guys to ask any questions. If you guys did get the newsletter, you would have seen an article by Mark. And if you have any questions, with regards to that article, here's a perfect time to ask. And if you haven't, feel free to pop a message in the chat to one of Amanda, myself, or the other Amanda Wood, Amanda Gates, and myself, and we'll be glad to add you to that list. So yeah, you all set, Mark?
Absolutely.
Firing range.
Yeah.
All right, let me pull out my notes here. So speaking of the article, you had mentioned that for you, your transaction volume has more than doubled for the months of June through October.
Absolutely.
Yeah, do you have any ideas from like your industry perspective what's causing that market trend? Like just because we understand a little bit on our end, but what is coming from your clients and what are you hearing on the street?
It's actually a really surprising turn of events to have happened because, of course, when things were dire, last March, we had thought it was going to go the complete opposite direction, and we were sort of bracing for that. How are people going to view homes? How are people going to get in here? What are the banks going to do? So a lot of those factors, I think, like I said, went ways I didn't think they would go. The first one that I think is industry related is lending. Yeah. I think, in my opinion, that's one of the biggest pieces that we can actually put a pin on and say that had to be a factor because money was so cheap. Interest rates are the lowest I've ever seen them. And especially from the big five banks. The fact that they are going so low, I think really prompted a lot of this business. Now, from a banking perspective, we got to lend to make money. So I think that were the decisions made on some of the higher levels. So I think one of the biggest factors was the ease of money, like the cheapness of it, but also the fact that it would also reduce how much money you could afford, how much you could afford on your home. And I think that did open up a lot of other possibilities for people. If they were tight on a test for 3% interest, they may have been, looser on a test for 1.74% interest. So I think that has a real direct factor on it. And I think it's something we can really put into a comparison to say this is a real effect. Not only the broker world, but of course the big fives were going low, and they were going low on all areas. I've seen 1.99 and lower on high-end homes. So homes that typically you wouldn't see those kind of lendings when you break those kind of numbers, and they're still doing them. And also income properties, you're seeing low funds on. There was a point in time where in the commercial world, the bank stopped. There was actually a period of time in March where the big banks funding big apartment buildings or big commercial buildings just stopped because they weren't sure what was going to go on. But they opened back up. So that was, I think, a really interesting area. I did feel that there was a impression from the bank, or it just seemed like the bank was more willing to do business than I would have expected. I don't know if perhaps maybe you felt that in your industry, maybe people who were previously looking in the 300 range, we're now we're up to the 350 range or so on.
Absolutely. Yeah. I mean, in our industry, people, well, first of all, if they had a product to sell, it was selling for more than what they thought it was going to sell, which meant that in order for them to get something comparable, or, with the like you said, the bank's lending out more money, of course, they're going to look in a larger price bracket. Plus they just made 30, 40, 50, in some cases, $100,000 more than what they thought they were going to sell their house for. Three homes went over $120,000 over asking price in HRM over the past month. So, so that's kind of affected people's purchasing, I guess, as well, and their decisions that they're making. Plus, just to get in a comparable house, right? It's kind of like when I used to talk to my friends that live in Toronto, they sell their house, but to get into something equal or better, it's exponentially higher. So, we've got that, just more zeros, right? We'll get there.
Yeah. So that I think was a direct factor. And I think we can look at it and say that, the bank's loosening it a little bit really did help things flow. One of the other areas, and I think maybe you could speak to this a bit more than I can, I think was supply and demand. There was already pent up demand. People wanted houses. And when the markets opened back up and said, restrictions are lifted, I think just the fact that there wasn't enough supply to meet the demand, that it really did create a frenzy.
Yeah.
And I think you could speak more to that than I could. I mean, obviously we have our own experiences as we see it, but do you think it's almost counterintuitive to say, the lower units created a more robust selling market?
Absolutely. 100%. I mean, we have properties that, a year ago wouldn't sell for their asking price, coming back on the market higher and selling again. Yeah. So it's the lack of inventory. We have people moving in. A vacant house right now is worth gold because, there are people living out of Airbnbs and hotels that have been relocated here and have quarantined and have no place to go. So, definitely supply and demand it's huge power. And you're right. We did have a strong market coming into this, and we had all the indications of strong economic growth with immigration really high. And I just think, that the Bank of Canada was smart in setting those interest rates and kind of keeping them at an all-time low, because it was able to sustain some sort of economic growth throughout the whole. And that's happening in a lot of tertiary markets as well, not just ours.
I've heard that of course, Halifax HRM itself is a big market, but I've heard of the same thing all through Nova Scotia.
Yeah.
And I've heard of it particularly up in Cape Breton. Some areas in Cape Breton was very hot, much so. And then through the Annapolis Valley, I've seen a lot of competition there as well.
Yeah.
Which leads me to more kind of speculative points that may have added to the frenzy. And I think you kind of touched on it there. We saw a lot of people from out of province buying.
Yeah.
There was a lot of out of province buyers, and they all had their own stories. Like, some had a connection, some have decided to come home, and maybe this was the time that they all decided, okay, we are going to come back to Nova Scotia. But we did have a few brand new, no connection, we want to move here. So I think the influx of out of province buyers, it just kind of added to the frenzy, because there's more people coming in, and potentially, like you said, maybe have a bit deeper pockets to come in and make stronger offers, and have created some of those higher prices. Because anything comparable in those markets, you're right, like for the price you can get an incredible, beautiful waterfront home here in Nova Scotia, selling your condo. We had young couples sold their condo in Ontario, bought a beautiful home down here. So the sort of economics of scale there have done it. And a lot of those out of province also bought vacant land.
Yes.
So that was an area of growth that I hadn't necessarily seen as much, right? There were a lot of people buying vacant land to look into buying.
Yeah, you did mention that as well, that a lot of people are, and I actually got an email just this evening from somebody thinking Nova Scotia was a lot smaller than it actually is. They wanted me to help them buy a piece of land in Yarmouth. But say I'm not really familiar with the prices of land in Yarmouth for small acres, but we'll find a way to help them out for sure.
And I had an interesting conversation with another colleague this morning who suggested an area that I hadn't considered before. And I've kind of put it out to hear your comments on it. The increasing rents in HRM.
Mm-hmm.
So because a lot of the rents are increasing, of course, it is making home ownership even a bit more attractive to say, well, here's the opportunity for me to get into a home and maybe pay less in a mortgage, or, use that rent to supplement my smaller, income property. Would that be a factor, do you think, to say, hey, rents are increasing so high? The home ownership area became a real possibility for people if you're kind of comparing scales.
I think you're right. The only challenge those guys have is just as hard to find a house as it is to find an apartment right now.
Well, you're on the money there,
right? Yeah. They're both so low in inventory that and we do. Like, I've seen quite a few over the summer that were renters, and they can't even find another place to rent, so a lot of them will go out and look for homes. And what I'm starting to see a lot of those younger people doing is actually kind of going a little bit outside the city, just because it's a little bit more affordable, right? Yeah. So going back
to strategies, other strategies beyond just here's what I'm going to buy, the first condo and so on like that. We've seen parties together or certain areas that buying properties that they wouldn't necessarily be looking at first.
Yeah, for sure. So going back to like the out of town buyers that you were chatting, what we've been seeing some offers come in sight unseen.
Yes.
Maybe talk a little bit about the legal risks, especially like some investors are doing this as well. Like, we're seeing some investors, write on properties just basically through a Zoom tour or a Facebook tour. I've done a few of them myself where we've written offers, but maybe you can talk to us a little bit about the risks.
There is real risk in making those offers. We had seen some on a residential scale, mostly because of, panic to get that offer in, or something to make your offer a bit more attractive than others, right? If it was to say, hey, here's the price, we'll meet your price. There's a lot of risk in it because you really don't know until you get into that home, or get into that building, because not every apartment building, has every single unit documented, right? Like, you got to get into each unit to really get a sense of, okay, what does it all look like? Because that's the issue. You don't really know what it looks like till you're there. The pictures they're putting on there, it's marketing, right? And some of it's great, but you don't always show the blemish, right? You show the strong part, and then you also don't really get a feel of how does it feel when I stand in it, or what can I do with it on the outside, right? Like, what does it really look like when I get there? And then the risk is, if something is discovered, beyond your condition date, it is on you. That's from a buyer's perspective, it's tough, because I've seen some people do it from contracting world. They're contractors, right? Or they have that experience. They say, yes, we can do it. But even beyond that, we've seen issues where, they put their mind to the condition of the home, but they didn't to the appliances, and the appliances didn't work.
Yeah.
So where is the go back? There isn't, because those are your chances to really inspect it and go from on. And then for me, from a legal perspective, there's so many milestones that I have to help the buyer or the seller, say, like, is this something that we really want to do? And if you take those milestones away, from a buyer's perspective, I guess from a seller's, but maybe more so from a buyer's, if you take those milestones away, I have less power.
Of course.
Right? So I have a much harder time to help or fix anything that's in there. And sight unseen has been difficult. Of course, through our own experiences, like in Greg, I know you've had some good and some bad ones, because that's the real risk. You don't know until you get in there that this is really what you want. And
especially on the residential side, like on the investor side, we write offers quite often sight unseen, and then we do our due diligence. But on the residential side, there seems to be, it's not approached in the same kind of method. There's a lot more emotions involved. So we tend to see, okay, I need to buy this place. It's just like, an investor looks at numbers. Well, a home buyer will look at, the walls and the colors of the paint. And then if they look at it, like we've had it happen where, deals have fallen because of it. So, and that kind of leads into my next question. Like, what are some of the, did you see any of the deals like unnecessarily lost in direct relation to taking some of those risks, like sight unseen and foregoing inspections and all of this stuff during COVID?
Absolutely. And on both ends, whether it is a, property that you're going to buy and live in, or whether it's an investment property. So I've seen a lot more than I would have expected this year.
Yep.
But it'll kind of lead to another point. I feel like we've had some tough deals being put together, because it is a tough market,
Mm-hmm.
The sight unseen, with the investors, typically, you keep that extra little kick in there so you can get out, right?
Yep.
There's inspections. It's more about numbers than anything. You get in and say, geez, this is going to cost more than I thought. So you're out. And so I guess like kind of those together are really, yes, I'm buying this building basically on appraised value, or my plan is I'm going to tear this thing down, right? You know what I mean? Like, if my plan is in 5 years, there's going to be a different building here.
Yeah.
But we did see some deals fall on that, because even though parties have said, it's sight unseen, no inspection, these issues have come up on closing that couldn't be resolved. Where I did see the majority of problems was in a no financing clause,
Really?
like waiving the financing condition. And I mean, I think it looks popular in a lot of the real estate TV shows. You know, they say this is it, but here, I've told people, you know, even if you have the funds available, like this is something that you can use to really make a decision of whether I want this or not. But a lot of buyers are putting that in on all angles to say, look, I'm here, I'm committed to do this deal. And that's where we saw changing circumstances from the banks. It's where I saw more deals fail.
Yeah.
Was coming in with no financing and then, quite frankly, losing financing before the deal got through.
Yeah, I mean, we were seeing it all the time as well. Like everybody was trying to find an angle to win. So, you know, we have a lot of properties that, you know, we're going to wait until 5 days later to look at any offers. We see that on most listings now that go up, just to get as many offers on the table as possible. And people will come in, and, you know, myself as well, with try to build a case basically for the buyer, especially on the residential side, to try and get them. So, you know, coming forward with a proof letter of financing, all the documents that need to be verified have been verified before we put the offer. I mean, we're going as far as, you know, not as far, but basically in Ontario, people are doing their inspections during their viewing so they can waive that condition. And I wouldn't be surprised if, you know, we start getting to something like that here to try and entice people. You know, it might be long for a viewing, but especially
it's an angle. I hadn't considered that. Actually, it's not a bad angle, because you know whether you're going to, when you leave there, you're like, here's our offer, right?
Even
like
if
we can
it's
write our offer and
even
have
if it's
something strong.
look at the 5 top things that could be the most expensive during your home inspection, and know that you're comfortable waiving the other parts if they're minor. You know, that may be an angle to take. But you know, in a few cases too, like we've been unsuccessful in a few, but successful in a few offers that we wanted to get dealt with before the timeline they were asking. And, you know, most cases they would reject our offer. But we did actually just a couple of weeks ago get one accepted and dealt with before their timeline. You know, and because it's frustrating, especially if you have clients that are, you know, writing 10 offers in 10 days and not getting anywhere.
Yeah. And on the residential side, like, you know, I can see the angle to say, hey, like, let's make this, but I have seen some risk on that as well, because I have seen financing lost after conditions and before closing.
Yeah.
So I mean, that's rough. I mean, you're going in there with a pre-approval letter. I mean, that's the due diligence, the level of due diligence you can do. But it's not set in stone.
Right.
Those things are, like, they can change. And I've been finding that, you know, some of the Ontario banks, the broker banks have been tougher, in my opinion, on reviewing some of those conditions. So we've seen that go. But on a commercial level, what I found was the banks were slower, and it's a bigger game, right? You've got more money in it. You know, there's less inventory. There's deposits. Sometimes there's stacked deposits, you know, when you get into those larger pieces and you're playing with, there's a lot of money there. So we did have a few clients, you know, go firm without financing completely finished.
Wow.
We did pull it out at the end, but there were some that, you know, the fear of extending it, right? Because it becomes a much more a tougher game. We did see some step out, and then I found that in April, you know, if I had, you know, half a dozen commercial deals, big deals on the go, they all stepped out, because the commercial world really took a big pause in April, but then came back, and so that was where I see a lot of the risk in those clauses, and a lot of those damages falling. But I also saw a lot more failed deals, even before conditions or you know, offers going out and in negotiations going back and forth before we really even got into a firm stage. That, you know, clients just didn't have the right. I think they put together tougher deals.
Yeah.
wanting to have certain deals, wanting to have certain buildings, and then just not having their not having their materials together, not having their portfolio together. If we have to go to a lender of second choice, your package has to be ready, to go into that lender of second choice and see if you can still get through into that deal.
Are you talking more on the selling side or on the buying side? So the sellers didn't have enough information, or the buyers didn't have
the buyers.
The buyers.
I found a lot more failed on buyers.
Wow.
Because they were, going to buy refinance buildings.
Mhm.
All their leases aren't up to date, and that's something that you should know. But when we were in the height of the market, everything was behind and everything was slow. So, hey, I don't have my insurance yet. That might take 1 day, 2 days, 5 days on the commercial end, but it could be much longer. I don't know if my lease is, taxes. So I found maybe a lot of unprepared buyers when things were coming in. They wanted that. They said, I've got to get that deal, but they didn't have their ducks in a row coming into it. And I don't know if that was the frenzy of the market wanting to be in it. On the seller side, completing some of the due diligence, migrating properties. We had out of province buyers on a large one. I did a large one out further past Hammonds Plains, and that was an out of province buyer that was just behind on financing, and it was a couple months behind. Going with a large bank. So we had to push that one basically to the date of. We started getting non-refundable large deposits, so it was a large deal, it was more than 28 units, but it was probably 3 million, and we were getting 50,000 unsecured every week.
Wow.
If you want to stay in this deal, you're going to pump that money in. So when you see where it really did get kind of, it's a bigger game, like you lose $5,000, that's it. But we're like, if you're in on this deal, it's 50 grand. And they got through it. But when we put the second unsecured 50K payment in, they came through pretty quickly. But that was, their lawyer was calling me at 9 o'clock at night. Right.
Yeah.
So I said, all right, you guys are working hard now.
You don't step in with 100,000 and not have, either
not
that
have,
more risk tolerance than me.
Yeah. That was a hard deal. That was the client. That was the client saying, let's get hard. Yeah.
Yeah. No, definitely a different market. Back when we last spoke pre-COVID, or kind of middle COVID, I guess they call it, pre-COVID, or right at the beginning of COVID, I guess. You guys are starting to make some changing and adapting your practice in the law side. How have you found that working out for you guys? Like, I know you guys, have you found it more efficient than pre-COVID, or are there more efficiencies, less deficiencies? How do you feel about it?
It's interesting because there's some angles that really have added, some great efficiency to our practice. The fact that we can do these virtual signings has taken away a lot of steps for out of province buyers, right? Because before I was having to send that, buyer or seller in another province to get their documents signed and notarized and then forwarded back to me. With another notarial certificate. Now I can do that meeting myself. And we can do the meetings really anywhere. The camera has added a lot of versatility. I've got this office, my home office, and really, as long as I can see you clearly, we've done Facebook Messenger signings, right? Like wherever they can play it down, right? I said iPhone, iTunes, or sorry, the iPhone, right? Like, whatever we can do to get it down. We ended up with Facebook Messenger video, and I was like, okay, this will do it. Like, just click on. So it gave us a lot more versatility in getting documents signed.
Yep.
But surprisingly, there was still a demand for in-person signings.
Really?
And I don't know if it's just the client's preference or just the speed of it all. For some clients, they said, look, it's busy. I'm just going to come in there. Right. We had a little signing area set up. But what I had thought would be, sort of widespread practice. Okay, we're only going to do online signings. Wasn't necessarily the case.
Really?
By the height of it, like when you're in there, in those busy months, there was a lot of people still coming in. And
I mean, there's also the point too that people doing business and they want that face to face,
I think so.
right?
Yeah, they want that sort of interaction, right?
Yeah,
And there's some parties that are still a little bit concerned about online and what's being
of course.
transmitted, right? Because
Mhm.
at times I'd have to be like, all right, well, send me all of your information. They may have wanted to come in and make those copies hard copy or so on. So that was an area that I think is really beneficial to us
Mhm.
because I can do that signing and get that document in and close a lot faster than I would if you were signing a document in Ontario or getting back to us. Like, so I've done as far as BC, I've done the Northwest Territories. I think it's really, important to be within Canada as a geographical piece. I haven't really tested beyond that,
Yeah.
but that gave us a lot of freedom. So I hope that sticks around, just because it has made it a little bit easier.
It's just great to have it as an option, right? I mean, Amanda and I have been using our digital signature format for, a little longer than you guys have adapted it, but we were chatting about it a couple of weeks ago, and something about we've saved 1 million trees by using this program, and we don't have, 17 filing cabinets. We have Google Drive, and we back it up. We do back it up. I have backups on my removable hard drives and stuff. But yeah, I mean, technology is made, especially in this competitive landscape. And, we have properties that our clients see, they want to write. It's not, okay, well, let's meet at Tim Hortons. It's like, I'll have you an offer in 3 minutes. And we can have it in front of them, especially if they're not waiting to deal with the offers. They're dealing with them right away. That's great. Having that technology is fantastic.
And I mean, as far as the contracts have been going and like terms within it, I have seen some commercial language in importing that force majeure, importing how to deal with further work stoppages, where it became really significant in some of the areas that I'm working on. With condo builds. So I've got some clients now that are building condo buildings. And one of the things that they're looking at with, like trade conditions, trade contracts, and so on, I have done some trades on those as well. So that big construction piece, it's very significant on like, well, what if there is a work slowdown, right? So those clauses have now come in there that they're fully explained out. A lot of it is putting responsibility back on the contractors to say, you're responsible to run your work site. So if you are the reason why you don't pass safety protocol, those are penalties now. Right? Like if we're shut down by the government, that's one thing. But if we're shut down by the government because you don't have the proper social distancing or proper safety protocol to deal with the pandemic, that's on them. And then that's a very big piece that was a very interesting piece that I saw that I said creates huge liability in that building world. Because again, economies of scale, right? But very important for the builder as well. You're saying I'm going to build a 20-unit building. The cost of borrowing the money to do that, the cost of holding it without having people in there. So that delay, that's a pandemic delay, became very, very significant. So that was an area that I thought was really interesting to see it in those builders contracts come out.
I think you and I did one too in one of the deals that we used some commercial lingo in one of the land deals that we had done earlier, a few months back. Interesting. Over onto the investment side, tenant issues. Have you found COVID-19 has affected residential, your own residential and commercial landlords that you deal with? Have you had any legal issues arise, I guess?
Yes. On a commercial and a residential level,
Okay.
To speak to the most important one was the rent, right? You
Yep.
know, they had an answer for residential, right? They said, okay, if you've lost your job, you know, we've passed, you know, the emergency measures, you can't be evicted at this period of time. And that's sort of, you know, in a nutshell. So I'm not trying to downplay the complexity of that because it wasn't necessarily that simple. But there was a lot of information out there for tenants to say, okay, well, I don't have to pay my rent. We had examples of clients with tenants who were on social assistance and stopped paying rent.
Mm-hmm.
You know, like just there's no loss of job there. There's no reason to do that. So the majority of problems we saw residential was rent. Because other than that, you know, we're not having a problem with vacancy, right? Like there's more and more. You know, moving out dates, you know, we've seen some difficulties with, you know, deals that had to be extended because, you know, parties weren't out. But where I saw the majority of my work tenant wise is commercial right now. So if you think of the commercial tenancy world, that's really getting hit because there's no backup in that, right? You know, like there's been, you know, the CERB would get in people's hands if they did lose their job. So I mean, those are areas that the government has responded with some influx. There was a small program that started, you know, if you have landlord and tenant buy-in, that you could get some funds that way. But it took a little bit longer steps. Where we see the damage really happening is in the commercial tenancies, where if the business was not doing well, that was the response. We did have a few that stopped paying rent, simply because that was their call to say, what are we going to do? There was a few we did have to work out deals with, but they were workout deals to leave. You know, like where do we go from here? We can't have you think of the exposure of you as a commercial landlord, whether it's income or like true commercial, not getting rent from your tenants. That's the whole basis of where it is, and there's no break for that large commercial.
No.
And we've also seen tougher banks. So the banks right now are really looking at your commercial portfolio. If you've got residential income properties, you're doing okay, because people have looked at, okay, housing is a, you know, is a right, like in a way that it really is that part of a discussion. But the commercial world, you know, if you've got, you know, a strip mall or an office building, or, you know, maybe a true mall, if you want to have those kind of levels, those are the ones that are really getting once overs. We're finding that banks are starting to knock on the doors of all of these income property owners, and particularly small commercial spots. Maybe you got 2 or 3 in a big building.
Yeah.
But all of those ones are getting knocks on their door to say, how are you guys doing? Where are you going? What are your plans moving forward? So there have been a lot more questions coming from that area. There have been a lot more demand coming from that area. And I think you're also going to see a lot more insolvency work coming from that area. I think that's where the biggest hit is going to be. And it depends on how everyone's businesses do moving forward. Of course, you know, the restaurant world has been tough. Retail is another interesting part, right? Like, so if you think of retail and how much we all jumped on board online, online sales, right? So you question whether we need this one or not. Older, sort of professional print models. We had printers, those kind of shops that we had some difficulties with. Restaurants again was a big one. Small business in all kinds of different areas. So the true commercial properties are the ones that I think are feeling the hit the most right now.
Yeah. Industrial seems, I was talking to a banker today, the industrial side seems to be doing okay. There's seems to be a lot of investment. I've been approached by some investors outside of the province here that want to invest in the industrial stuff, but commercial is it's a pretty tough game right now. I mean, when you're down 70% of your typical potential earnings, you're not just paying rent, you're paying other things too. And I mean, I don't,
and banks are calling. So those are the mortgages that you're gonna, in my opinion, you're gonna see the banks pulling those mortgages first. So you're gonna see bigger name insolvencies go first, because of course they're like, where's the bigger piece? Yep. Whereas we may see some problems with, smaller income properties, maybe some mom and pops that lost a couple tenants and didn't fill them correctly. But that would be the area that I think you see the most damage being done right now is true commercial.
Yeah, no, I do agree. All right, we've gone over a half an hour, but it's really easy to talk to you. You've got some great information to give us on all this stuff. So
you too. Well, we've been talking a lot.
Let's just see here. One other thing, we do have some new investors that come in. We're growing really fast. Our network is I think we welcome, Amanda welcomes 5 to 10 new people every week. So we're growing at a really fast pace. And a lot of people talk to me about joint ventures.
Yes.
I've done joint ventures. I'm currently doing some joint venture work right now. But can you talk to us a little bit about, just give our listeners a few tips of things that they may want to consider when going into a joint venture partnership?
I always give the explanation that joint ventures in Nova Scotia absolutely work, but most of the information you're going to get about joint ventures are from other provinces. The majority of the information that you're going to get out there, from larger networks, are going to be joint ventures driven. Mostly what I find is Ontario and Alberta. That's where I see the most of the information coming from. So every province in Nova Scotia just has subtle differences about, what's allowed in property law, what's common in property law. And so the two of those kind of come together, where there could be a scenario where you bring in, a joint venture agreement from Alberta and say, Mark, here's the deal I'm going to put together. But I may say, the way that this registration works doesn't work here. The way that these cuts work doesn't work here. The explanation of how you own the property doesn't work here. So those are all things to look at to say, okay, will it work here? And another question I had was, is it common or is it well understood here? Because some joint venture strategies work here, but if it's something new, you got to find the right people to look into it, right? Because, we're busy. A lot of guys are busy. They're used to the old ways, right? This is how it goes. This is how it does. And they don't have as much time or ability to really look into some of these other structures. So you want to make sure that you've got the right people on board, but also the right people on the other side, right? Because, a joint venture that you're putting together as a buyer could be killed by a selling lawyer who just does not quite understand it or not be interested in doing it. because there are areas that there are some joint ventures that put more risk on the seller, whether it's like, holding VTBs is fairly basic, but there's all kinds of different levels that, it could put more stress on the seller. And with a, real estate lawyer who has maybe not seen that structure, you could get some pushback. So my advice is figure out what kind of form and structure you're putting together. But take a look at it, and then review it with the lawyer that you're working with and say, can we do this? Is this something that we can put together here? And then from beyond there, you want to think about who's going to do what, right? You've got the classic structure of the kind of the silent partner, active partner, and that does work here in Nova Scotia, but we have some complications about how we register interests. So oftentimes, if you're both parties to have equal protection would want to be on deed on the ownership, but some of the Ontario precedents only has one party on them. So you want to think about how can we register this that it works for everybody. Or if you're the buyer alone, you're going to say, how do we make this work for me? But that's what I would be doing to help out, to say, let's get through these. And I've had questions, recently on areas that new structures that I haven't seen before, right? I'm familiar with vendor take back financing, assignments, all kinds of ultimate structures like that. But there are things that come in that I say, geez, I actually haven't heard that before. Like, I want to take a look at it and see where it goes. And I would also say maybe throw back to Greg, there's going to be some structures that work here in Nova Scotia. But there are some that aren't necessarily as common as others. So a question I had for many years was selling the contract, right? Can I get the deal and sell that deal out to someone else? And my feeling is in law, yes, like that is legal, but it's not common here.
No, not as common as you would think. But in the investor world, it is happening more and more all the time.
Yeah. And maybe that's what we'll see as the market gets tougher, or just generations of money moving. A lot of these JV structures are put together as alternative ways to make a deal happen, right? Whether it's multiple people working together, or just the ability to make that sale happen. Because sometimes you have eager buyers who are willing to come together and do that deal. But they need the ability to get in, right? Taking a step into that large commercial world can be pricey. So sometimes you need these structures to go forward. So I think they're all, they're all at least worth looking at, but figuring out, is this the right structure for me to do? But also, if I've got these partners, who is doing what? Right? And it's got to be clear from the beginning, who's doing what, who's responsible for what payments are, what's my return, all of those good things.
Absolutely. 100%. You want to have that spelled out before you even start looking at properties.
Absolutely.
Yeah. Somebody, it must be an emergency. Do you have to bail somebody out of jail or something?
I think my little guy got the phone. My wife did. I think my 4-year-old got the phone. It's about bedtime.
Love it. All right, so I'm going to open things up now, Mark. That was great chatting.
Absolutely.
We're going to try and keep this on schedule, but I think some questions are starting to pop into the chat. We're going to bring Amanda Gates and Jenna on board. So if there's any questions for anybody in the crowd, we'll get through those now. Awesome. All right, we got Jenna, we got Amanda. Here we go.
Hopping back on. I saw a few in the question area here. There was one just on the topic we were talking about, and this one's directed to Mark.
Okay.
It was, Mark, what is your advice when working with a seller who is agreeable to vendor take back, actually likes the structure, but then
Okay.
goes to their lawyer for advice who isn't very familiar? Get a new lawyer?
Yeah,
Call Mark
it
Carl?
might be, but it might also just be a call, right? Like, you know, the information to say, you know, give my lawyer a call, right? Because a lot of times once, you know, the two lawyers get together, we kind of speak that language, right? That we can explain, here's where it is, here's what's going on, and see if that we can kind of win them over, to at least understand what we're doing, because there are some lawyers, like I said, you know, maybe in some smaller markets, that doesn't necessarily get a chance to see those kind of deals, that we have come on. I'm doing a deal right now that's the assignment of a foreclosure deed, so that's unique. And we had a senior lawyer who's well established, in a secondary market, kind of balk on it, but then, you know, called me up and, you know, said, what's going on? And I just explained it to him, you know, here's the forms we've got to file to make this happen, and here's the process we got to do. And it was a little bit different than how we would normally do it, but at the end he was like, all right, you know. So it's just sometimes, you know, even veterans or even myself, if someone were to call me up and say, here's what we're doing, and I hadn't been familiar with it, like, I'm more than willing to think about it, and put it together.
Yeah. Especially if one side knows the process. You know, if one lawyer knows it, then you're right. Just get lawyers to talk to lawyers and lawyerese verbiages.
Yeah, because the answer was, it was exactly like, can we do that? And I was like, no, I think we can. And this is how we're going to get there. So that's, maybe say it nicely, right? Like, you know, let my lawyer talk to your lawyer, right? Like, you know, let's see if we can put it together.
Yeah.
But that would be it. Yeah.
My lawyer's smarter than your lawyer.
More creative. I don't know. He's just out there, right?
Yeah. All right. Do we have any other questions that came up in the chat, or is that it?
There was a question asking if you or I had ever sat down with a seller to explain how a deal would work for everyone. I'm assuming with a vendor take back. So
That was to you and I?
yeah.
So let me understand that. So sit with a buyer and seller and explain to them how vendor take back would work?
Yeah. Have you ever had a buyer sit down with the seller to explain? So no, we typically, I mean, I don't know if you have done it in your
I mean, myself as a buyer, I have sat down with a seller and talked about vendor take back. But to have a buyer sit with a seller, no, I haven't experienced that where they've sat down. I mean, I've always presented any vendor take back options and proposed them, but not. I've never had them face to face.
I have had experience with more experienced real estate investors who bring me deals. Like on the commercial level, do you know what I mean? Like, you know, it's a larger deal. We're buying a bunch of different buildings, and they've already kind of negotiated out the majority of those terms.
Right.
You know, I've had those experiences where sophisticated parties will come in and they would have talked to probably another sophisticated party as opposed to an unsophisticated party on how it works, because the vendor take back is very common in the commercial world in my experience right now. Again, true commercial, but also apartment buildings. We're doing a very big one on, oh geez, I want to say it's more than 30 units in the Valley, in the Kentville market, and that's a big piece on it that we've got there. And that was negotiated between parties who were both sophisticated, and then came to me and said, you know, how do we paper it? Like, this is the explanation of how it works, but then how do we paper it is more my question.
Awesome.
Okay, and another question that came in was, hi, Mark and Greg, do you expect to see more houses available for sale in HRM anytime soon? So pull out your crystal balls. It's a tough one.
Why don't I go first? Because I'll give you my experience. Greg is, of course, the realtor. He's got a bit more experience maybe in that area. But my general feeling for the market is I think the market's going to stay hot. I think next spring is going to be tough. I think we're going to see it because where I was looking at before saying, oh no, things are going to freeze up. I think it's just going to be tougher. Where those houses come from, I don't know. Maybe I'll turn that over to Greg. Yeah.
Yeah, exactly. Definitely, I think it's going to stay a hot market. I think, the inventory will catch up. What I think is probably going to happen is all these people finding out that people are getting $40,000, $50,000 over asking and are willing to either A, move out of town to where there's a little bit more inventory, or B, just rent for a while. And I've seen people do that. Like they're like, wow, the market's hot. I'm going to rent for a while. I'm going to take my money off the table and I'll move into a condo and rent a condo for a year. And if the market settles down or becomes better, then I'll reinvest. So I agree. I think it's going to stay strong. I don't think we're going to have a crash. I think it's going to, it might flatten out a little bit. I mean, obviously we're at 12% appreciation year over year from this time last year. I don't think that's sustainable to continue at that level. But we're definitely seeing a huge jump, and I think it's indications of a strong market. But like I always say, we were into that; those indications were in place before COVID, and I think maybe we still would be in that same place.
A comment I would make as well, through talking to some other colleagues in my legal profession. You may see some more foreclosure action. You may see some more distressed homes coming out into the market, because there's been a real lull in it. The banks have kind of sat back to say, what are we, what's going on, especially in that residential and the residential, and then the smaller income property buildings, maybe the 4 units and stuff like that. So there hasn't been a lot of movement from banks in that area, but I think we'll see some movement in 2021, where I said the banks are going at the big commercial ones right now.
Mm-hmm.
You may see some more opportunities. You may see some more distressed home sales in 2021. Unfortunately, so just because those could be the deferrals, or deferrals who don't have plans yet, and then hopefully, rather than go that far, people would make the decision to put their homes for sale, because maybe they get over asking for them, or their buildings, and they just tap out and say, this wasn't for me. If I've got a 4-unit building and I'm, maybe it's underperforming, or I've got a lot of deferred maintenance on it, I just need to let it go. So I think that you may see some opportunity there, as a potential growth area.
For sure. Awesome. Good answer.
Okay, so kind of a good lead off to the next question. We had Rob asked if for property tax sales, if you win the auction, what are your legal rights / obligations to the property for the redeemable period?
That's an interesting question. I think it's a pretty specific question. I might need to come back on that one. So I guess a further question would be, is this a vacant property? Mm-hmm. In which case, I don't think that you have any duties or liabilities at that stage, because it's truly not yours. Even it's redeemable. So you won't get that deed until that redeemable period ends, right? So really, my opinion would be, until that deed is in your name, you don't have any liability on that building. I'd like to look a bit further on that, but that's kind of my gut. and it's an interesting method of buying properties, because if you are in a redeemable period, then that party has until the redeemable period ends to pay you back and buy back their property. So I think that it is conceivable that it could be occupied. The majority of them aren't. And in HRM, well, I'll take that back. There's a wide range of properties that you've seen come up now. Typically, it used to be, remainder properties or so on. But the HRM properties that I saw this year had, series of condos, right? It looks like, it had a lot of stuff that I said, there's a lot of good properties here. But to kind of shorten it, I don't think there's much, but I would want to look back on that to confirm the lawyer's answer, right? Let me confirm. But the gut is, I think you're fine until you redeem it.
Yeah.
Okay. Greg, have you seen, actually, I guess this is directed to both of us, but have you seen many homes that are foreign owned being sold?
I've seen more foreign interest to buy than I have seen foreign interest to sell. I get quite a few inquiries on that side. So more investment side stuff happening than the sales side. We saw an exodus of foreign buyers, I would say around the 2012. We had a lot of people from Europe pulling the plug here. And I think that had more to do with what was happening in Europe than what was happening here. But yeah, no, so more on the buying side than selling side.
Yeah, totally agree.
Yeah.
Awesome.
And we have a question just looking for an update on the zoning for changes for secondary units in HRM. Now, I know you are trying to, at the moment, get someone in to speak with us about that. Is that correct?
Yeah, I was talking to Eric, I believe on Friday it was, or maybe it was Monday. I was speaking to Eric Luchik, who's in charge of Center Plan and rolling that out. From my understanding, they're going to be allowing it after January, but with HRM and how things are moving a little bit slower than planned, everything from permits to, absolutely everything in HRM is a little bit slower right now. I wouldn't hold my breath for January. I'm hoping for January so we can exercise that. I've had some clients inquire, and they're, it's spread out it's all over HRM too. It's not just in the Center Plan areas, so which is really promising. But I was told phase 2 or B will be it was planned for late January for that part of the Center Plan, but is going to be pushed out probably till like the end of January, early Feb. So Eric's going to come back and join us probably early spring to give us a nice update to the group. But yeah, as far as the secondary units, as we talked about in the it's in the article in the newsletter that we sent out, the investor report earlier this week. You can, if you don't have a copy of that, click there, and I think there's a link that brings you to the HRM page. Within that link, there's some frequently asked questions, and it goes in a lot deeper because it's a lot of questions that we might have about the secondary suites and how you can use them and what size lots you need and different stuff in zoning. I've had a few clients look into, exercising these, and whether it'd be buying a single family home in an R2 zone to create a secondary legal 2 unit and then bring a 3rd unit into the back. We've run into a few roadblocks on lot size, but there definitely is some opportunity that's going to arise there because there's a lot of places that you can put secondary suites in. Long answer.
And I'm really interested in taking a look at that myself, for my own portfolio. But I thought it would be really interesting is if you could do the sort of the 3-unit piece that we were talking about there, which was turn the existing property into a 2-unit, and then do the secondary suite in the back.
Yep.
I
Yeah,
don't know.
one
I don't know if that's going to fly yet, but I mean, that's a really interesting angle on properties with big lot size.
Yep. Yep. I mean, as long as the zoning allows for that second unit, the third one is because it based on their explanation, right? If you read the explanation, any duplex. So basically, if you buy a single family home in an R2 zone that you have a big enough lot that you can put that second unit in, you can put that second unit in.
Right.
And the lot size. So we ran into this. The lot size dictates the second unit. It doesn't dictate the suite unit. I don't know if I'm making sense here, but basically you can build that secondary suite regardless of the size of the lot. If you have a garage in the backyard that takes your whole garage, you can still build a secondary suite in that garage.
Wow.
Yeah.
Wow.
Yeah. So it's going to be interesting.
And I guess we just had a question if we are aware of many garden suites here in the area right now. I definitely know there's a few, but I don't think there's
Legally
many.
or not legal?
Maybe a bit of both.
Yeah. No, I mean, I've sold some houses in the past that had little garden suites. But, you know, none of them are legal to rent at the moment. Unless the zoning calls for 2 units on a building.
Seen a few sort of like pocket homes that I look at and I say to myself, is that one? But I can't. I don't know if I've worked on one specifically in the province. I did a file for a client who had, this was out Eastern Passage. It was an older part of Eastern Passage, and he had 2 homes on the same PID with different addresses. So province was fully aware, but 2 fully functioning homes on the same PID. So when we were going to, and he owned like a series of them in a row, and he said, I'm going to go subdivide it. It was a big deal because the city said, you can't have that. And he's like, you gave me the address, right?
Mm-hmm.
So that was a circumstance too that I said, you know what, I don't often see those things in the city, and I was actually very surprised to see it, but we had it, and then we did manage to subdivide it, but we had to work with the city to get through it, but it did work out in our favor at the end.
Wow. Yeah, that's good. And it's risky, right? Having multiple on one PID.
And he had it for years, so I mean, it must have. I don't want to use the word grandfather, but it existed. You know, late '90s.
Wow.
In that area, like it was built. It was occupancy permits and addresses.
Yeah.
It's in PID. So you know, I'd have to say pre 2004.
Oh yeah, wouldn't have been mine
before any recognition, and then it just went through.
Yeah.
Okay, and I guess keeping on this, maybe this is more of a comment than a question, but Mike Burgess says he understands that they will not allow a basement and garden suite. I think that probably depends on the zoning, though. If it's already
I think you're right. My basic understanding is that you can't have 2 suites. You can have 1 suite. If it's a 2 unit already, you can have a suite. If it's a 1 unit in an R2 zone where you're going to build the second unit and then bring in a basement suite or an outside, but yes, you can only build one of them. You can't build both a garden suite and a basement suite.
Even if it's R2 zoned?
If it's R2 zone, you can, yeah, but you can't. But that would be different. That would be a 2 unit and then a suite. Yeah. So you could actually have a duplex, a side-by-side duplex, and you can put a suite underneath it. But you can't put a suite underneath it and then put a garden suite. You can only have 1 additional. Okay. And it only goes up to duplexes. I did find that out as well. So if you have a triplex or 4 unit, you can't add that additional suite.
Interesting.
I have to chime in and say how exciting it is for tenants that are looking, because we get so many inquiries for one bedroom specifically. So I could see that there'll be a lot of really cute one bedrooms and a lot of garages. You can do like really sweet conversions. So I think that's really exciting. And I guess there'll be some 2 bedrooms too that people put in. And Trevor, who I see on the call here, you've got a garage ready to go that you could make
Right on.
something cool with too at one of your places. So yeah, it'll be interesting to see what people come up with. Yeah.
For sure.
Yeah, that's great.
Awesome.
And
All right. Do we have any other questions? Or we?
I think, I guess one, we can address that privately too, but just someone was asking how to access, it says pre-foreclosure documents or lists. I'm assuming maybe they mean like access to tax sales and so on.
Yeah, I mean, we do have we have an HRM website. You can access tax sales. Tells you the next tax sale and then what the properties are, so you can do the research on them. For foreclosures, you can go down to the courthouse or in the paper. You can get the list down there at the courthouse on Lower Water, and it talks about the upcoming foreclosure sales. Good to always check back in, because sometimes they get postponed or delayed due to different reasons. And you can also there's fees you can pay to get records, and you can sit and review the records right there in the courthouse. I've done that myself, where you can pay a small fee and have access to the files to see exactly what's out on the property, the history, and all of that stuff. So there's a wealth of knowledge right at your fingertips.
Great. And we just had someone ask, Douglas asked if this is a weekly event. So just for anyone who's new on here, we actually try to do this monthly. And I think that we probably won't do one next month, thinking that it's quite busy for everyone, a busy time of year, but we'll pick that right back up in January. And but we do have a Facebook page, if you're not a part of that, where we have a lot of conversations going on, and you can ask other investors any questions you have, from investment questions to, do you have a painter in mind, like just anything. So it's a great group there. So if you don't, if you're not a part of our Facebook group, then definitely go ahead and join there. But we'll be picking the online web meetup webinar up in January.
Yes, for sure. Awesome. Thanks, thanks Amanda, for that update.
Yeah, no worries. Other than that, it's been hard. The questions have kind of been all over the place. So if we for some reason missed your question, oh wait, one last one. Jenna, what areas do you serve?
Oh, hi there, Douglas, who's asking that question. Yeah, so I serve all of HRM. So from, I think, Musquodoboit Harbor on the eastern shore, Porters Lake, Lake Echo, Dartmouth Central, Halifax, all the way to like Brookside, Shad Bay, a big circle, even the Forest Lakes development in Mount Uniacke, like up past Mount Uniacke, and then as far as Milford and Elmsdale, and all around Halifax. I do a lot of single family homes and a lot of stuff in central Halifax as well. Yep. Thanks.
Great. So I think that is all of the questions.
Awesome.
Great.
Yeah, so speaking of our next interview, basically, I actually was just able to confirm for January, we're going to have a private banker on. So kind of changed our world, where Jenna and I have multiple businesses that do all kinds of different things, from real estate to private lending to ATMs to real, all sorts of different avenues, and manage a lot of it on our own. And banking can get pretty hectic if I was trying to explain the way we need to juggle things inside of that, it can get confusing. But what's really changed our world is using some private banking features, and having people that can act very quickly without waiting on hold, without having to wait on phone, or wait in line at a teller. You know, I've had certain transactions that have been time sensitive, where I've needed money orders for a certain real estate transaction or something. And I've been able to send an email and tell them the branch I need to pick it up at. And when I walk in, I just give them my name and it's ready. So it's kind of, at first I was very hesitant on spending, you know, the very little amount that it did cost, because I'm cheap that way. But you know, it has paid off in saving me a lot of time and just basically, yeah. So we're going to interview Marcel Dupupe. He's a private banker here in Halifax. So if anybody wants to hear some trends, and he's very knowledgeable about the investment world, from real estate to commercial to all facets. So that'll be coming up in January. But listen, I really want to say thank you to Mark Charles for joining us tonight.
Thanks for having me.
Always a wealth of information, you know. I'm sure I'm going to get my bill in the mail for this.
They put it on your tab.
And just put it on my tab. Yeah. I'll get you back. I owe you.
That works.
Yeah, for sure. All right. Well, thanks everybody for joining us. And have a happy holiday with yours and your family. And we'll catch up in January.
Thanks a lot, guys. My pleasure. We'll talk soon.
Good night.
Thanks, everybody.